record.
This meeting is being recorded.
I'll put it on share screen and I'll start. Say I'm gonna put this in YouTube in case people have missed it and they can watch the replay. So here we go. This is my trading view chart for GBP USD. I'm on the 15-minute time frame, and I'm looking at Crossfire, which we look at between 1 and 3 p.m. UK time. The Forex pairs that we look at are those four there. So there's 2 US dollar pairs and 2 Canadian dollar pairs. I've also had quite a bit of success with gold, which is XAU USD if you're looking for it. But word of caution, if you're not experienced trader, I would leave that one alone for now. It does move very fast and it moves a lot further than the Forex pairs. It's a great pair to trade, but you need to know exactly what you're doing with that one. There's also an opportunity to do Crossfire in the early morning in the UK, 6 a.m. till 8 a.m. The moves normally occur around about 7 o'clock, to be honest. But there's a couple of AUD pairs and a couple of New Zealand dollar pairs. When I'm back in the UK, that's my favorite time to trade, between 6 and 8 UK. I'm normally done before 7 a.m. Done for the day, done for the week kind of thing. But because we're looking at this at 1 o'clock in the afternoon UK, we'll concentrate on those pairs. There are videos in the training that you can look at and get full explanations. I'm going to turn off my camera because my internet connection, although it seems fairly stable at the moment, we do without the extra bandwidth of the camera. So I'm going to turn my camera off. You don't need to watch me. Just give me a bit of extra bandwidth on the things that are important. And I'm going to close you guys down there. So, okay. So, anybody wants to take a screenshot of that, by all means do so within the next 10 seconds, because I'm going to get rid of those. 10, 9, 8, 5, 4, 3, 2, 1. Okay, so I'm going to get rid of those. And so what I'm looking at GBP US dollar. I noticed, I was watching Paul the last couple of days and he started going back to putting the lines on the buy and sell lines. That's on the 1 o'clock candle. Now the 1 o'clock candle is that one there, and to do this using the lines, you need to wait until that 1 o'clock candle is closed. So in the meantime, we'll look at what I'm just going to explain what I'm seeing on this screen right now. I'm going to take off the Straight Forward Forex, and we're just looking at the basic 15-minute chart for GBP US dollar. Now, somebody said, I think it was Paul or Kevin, somebody said, if you can work out where price is going to go from that chart, then you don't need straightforward Forex. If, like me, you struggle a little bit, you probably find straightforward Forex will help. So here we go. We've got a number of things on this chart, and I'm just going to, for the benefit of anybody who's new to this, I'm just going to run through what I'm seeing when I see this chart. First of all, we were in an up zone. That's a green panel there, but we're currently in a down zone. At the same time, we've got a wave down. WDN stands for wave down, and that candle is the wave down candle. And we've also got the super trend, which is that red line there. And what I'm looking at is that super trend is basically a flat line. It's not going anywhere, it's moving sideways. I've got additional indicators on here. I've got the PSARs, which are these red dots, and these red dots are actually pushing price down, even though price is actually going up. A couple of other things I'm looking at here. We've got this black line, and that black line is the 50 moving average. You can change the value of that. You can change it to 62 or 13 or whatever you want to change it to. But I've got mine set at 50. And what that's telling me is that the current price is below the average of the last 50 candles. So these are 15-minute candles. So the last 15-minute candles, the average price has been there and current price is below it. And there's one other thing I'm really looking at here. These dashed lines here, this one is saying that we're in a down zone. And if I just move this in, you see this is saying ranging. In other words, it's consolidating, it's just moving sideways. For it to start moving into a bearish mode, it would have to break below that dotted line there. For it to move into a bullish mode, it would have to break above that dashed line there. So that's what I'm looking at when I see this chart. There's something else as well. You see this indicated, this sort of Zorro thing down here. This is alerting me to the fact there's something going on news-wise. And if you look at this panel here, it says 42 minutes ago, the US dollar improves early Friday ahead of existing home sales. So what we need to do is look at the news, Forex Factory. I'm still on UK time here, so at 1:30 p.m., so that's in 21 minutes, there's a couple of orange flag news items relating to the Canadian dollar. So I expect some movement in the Canadian dollar at that time, not because the news necessarily affects the market, but because the big market players use the news as an excuse to do their manipulation. So 1:30, we might expect some movement in the Canadian dollar pairs. On this occasion, we've also got at 3 p.m. UK time. There's on the US dollar, this is the existing home sales that was mentioned earlier. So again, I'm expecting a bit of price manipulation where the big boys use that news to manipulate price to get it where they want it to be. I'm going to double check on my FX book, and here we are. Ignore the time here because for some reason my FX book has spotted that I'm in a different time zone. So it's saying 8:30. So that's actually 1:30 UK time. Same three high impact news items relating to the Canadian dollar. I don't know why it says November. Retail sales month on month November, retail sales year on year November. I've got no idea why it says November. But that will be where the Canadian dollar pairs do make the move to where the markets want them to be. And down here, we've got two US dollar. So that's at 3 o'clock UK time. So these are the two US dollar news items that are going to affect price. So we'll bear those in mind. We won't still be on at 3 o'clock, but it may mean that the US dollar pair don't make any significant moves whilst we are on. So British pound, US dollar. I'm going to stick with we need to wait until this candle closes before we put the lines on. But what we can do is we can put a couple of lines on in place just in readiness for the move. So I've got a green line above the current price. I can put a red line below the current price, and then we can put them in place later. We'll do the same on the other three. I'm going to ignore gold because I'm conscious we've got a lot of people, not a lot of new people watching. So I don't want to confuse the new people. So we'll just put these lines on, one above green, one below red. Please ask any questions if you've got any US dollar. One above, that green, one below. I'm finding that I can do the Crossfire without putting these lines on, just using Straight Forward Forex. But if you feel more comfortable with the lines on, by all means do it. GBP CAD. That's the green line. And that's the red line. Okay, so we've got two lines now on each of the four charts ready for that candle to close. And basically what we're looking at is at 1:15, we'll drop down to the 5-minute chart. And in fact, I'll drop down to the 2-minute chart. And we'll be looking for the price. If price moves above the green line, we'll be looking for a buy. If price drops below the red line, we'll be looking for a sell. As I say, I don't necessarily use the two lines anymore because I'm getting earlier entries simply by looking at the Straight Forward Forex indicators. What Paul calls the Trinity. So he's looking for a down zone, a wave down, and a super trend down to get him for a sell. Here he will be looking for an up zone, a wave up, but he hasn't got a super trend, so he wouldn't get into that. So that candle is now closed. So what we need to do is look at the two Canadian pairs first, because that's where the action is going to happen first. So I'm looking at this candle here, which is a 1 o'clock candle. There's a wick above and there's a wick below. So what I do is I look to the top of that wick and then I look left to the nearest high. Now that happens to be that one there. If anybody doesn't follow what I'm doing, please shout out. And then I need that line to touch the top of the 1 o'clock candle, in fact, the top of the wick on the 1 o'clock candle. There we go. So what I've done there is I've connected the earlier high to the 1 o'clock candle, and I've now got what I call a buy line. I'm looking for price to go above the green line or alternatively below the red line. So the red line, I'm looking to the left, and it's that one there. So I now drag this up so that it goes, touches the, wanted to touch the bottom of the wick of the 1 o'clock candle. So there we go. And that's where this strategy gets its name from. You can see it's called Crossfire, and you've got the crossover. Now, what's happening at the minute on GBP CAD is price is trying to get above the green line. If it does go above the green line, if that candle closes above the green line, I'll be seriously considering going in for a buy. But we've got this down zone, which would stop me getting in. But we'll leave that for the minute. what I need to do is drop that down to the 5 minutes. And if you drop it down to the 2 minute, you can see that price is trying to get above the green line, but the other indicators are not saying. We've got an up zone, we've got a wave up, but we haven't got a super trend. Well, yes, we have now. We've just got a super trend up. Now that if you just ignore the green and the red line, can you see why I'm saying I don't particularly need them at the minute? Because I've got the Trinity. I've got the up zone, I've got the wave up, and I've got the super trend up. The wave candles are getting bigger. The PSARs are below the price, pushing price up. So yes, you can wait for this green and red crossover. So green and red, that's a buy line, that's a sell line. You can wait for that if you want, but I don't need to, because I'm on the 2 minute time frame and I'm looking at a possibility that's gone flat. So I'm not particularly interested in getting in just yet. The other thing that will stop me getting in that right now is the fact this up zone is way back. That occurred at 12:26, over half an hour ago. So I'm a little bit cautious. I'm not discounting it, but I'm a bit cautious. So I'm going to look at the Euro CAD. Go back to the 15 minute. So that's a 1 o'clock candle. At the top of the wick, I'm looking left to see a higher high, and it was up there. Drag that down so that it touches the top of the 1 o'clock wick. 1 o'clock candle, there's the bottom of the wick. I'm looking to the left. There isn't, in today's session, there isn't a lower low. So what I'm going to do is I'm going to make this horizontal from the bottom of the wick. Let me just correct that. Okay, so if I go to the 2 minute chart, there we go. We've got an up zone, we've got a wave up, we've got a super trend up, and it's above the green line. And this is bullish. So I'm now considering getting into Euro CAD for a buy. I'm just going to do this for fun. I'm going to say, right, where would my stop loss be? Kevin's given us a couple of possible stop losses. One would be if there was a bull candle there. You see that bull candle? There's a bull candle there. For some reason, there isn't a green line across there. The alternative one is a wave up candle, the bottom of that candle there. So let's say I'm going to go for that as my stop loss. The bottom of the wave up. I always make mine red, so that makes it clear. Now let's have a look at, I'm going for a buy, so let's say I get in now, there, and I move my back down to the stop loss. So that's giving me 12.3 pips stop loss. I'm happy with that. Let's move this up to 1-to-1. 1.01-to-1. But basically now what I'm looking at is I got in just before it dipped down. So I needed to get back into the green zone, and then I needed to go up to So that's my take profit. Make that blue. Now, just to explain what I've just done, I've already worked out, if you're using the trade manager will do it for you, but I only ever risk 1% on any trade. So 12.3 pips is equivalent. If I lose that trade, I've lost 1% of my account. If I win this trade, I've gained 1% of my account. That's what this is all about. There's a risk to reward of just slightly over 1 to 1. So as I say, any questions, just shout out. I'm going to go back to the other Canadian dollar pair. Now, the reason I'm not panicking right now is we're still in an up zone. We've still got a wave up and we've still got a green super trend. Although it has flattened out, these green wave candles are still moving upwards. That one's not quite as big as that one, but it's still looking reasonable. I wouldn't panic to get out of that. As I say, if it does come back to my stop loss there, I'll be taken out of the trade and I'll have lost 1%. I'm not going to worry about losing 1%. Let's have a look at the lines that I put on. This is the green buy line. We're still above the green buy line, so I'm okay. I'm not panicking. Let's have a look at GBP card. Okay, 2-minute time frame. Now, it went above the green line. It wicked right the way up there, and then it started to come back down again. Let's look at the overall picture. So we are still in an up zone. If any of you remember what we used to do with the Ninjacator and the Ninja Matrix, this up zone is doing the same job. So if we'd had a Ninja up and a Ninjacator up, we'd be in an up zone. We've got a wave up, and the wave is actually getting bigger. It's come back to test that buy line. My super trend is green. It has flattened out a bit, so I'm not going to get in there just yet. If I was going to get in there for a buy, there's a wave up candle, there's a green line showing, there's a potential stop loss. So let's mark that anyway. That's my potential stop loss. And I'll wait until price makes its mind up. The PSARs are still pushing price up, although they are getting closer to the candle. Right, so it's now nearly 1:30. So I'm expecting something to happen on these two pairs in 4 minutes' time. I'm just ignoring the US dollar pairs because the news that's going to make the shift is not until 3 o'clock. So how do I feel about this? We've now gone into a down zone, so that's not good. The wave is still going up and the super trend is still green, but it's flattened out. PSAR is above the price. So conflicting information. This is still saying bullish. And this is still, this dash line here is still saying that price would need to break below that line for it to become bearish. So I'm still reasonably confident about this trade. See, it's bouncing off a green line. It's retesting that green line. So, can somebody just confirm that you can still hear me, because it's gone very quiet at your end?
Yeah, we can still hear you.
Okay, good. I've been suffering from Wi-Fi dropping out. I'm sitting in a hotel room, and it's not the best place to do a Zoom meeting. Right, so this isn't looking good at the minute, but as I say, if it comes down to my stop loss, I'll have lost 1% of my account. I'm not really going to cry over that. There's lots more trades, but what I'm seeing, what's going through my mind is it's bouncing off. It's respecting this trend line. It's trying to break through it, but it hasn't made it. Right, I'm going to go back to the other Canadian dollar pair. Right, now, that one is what you'll call a fake out. It tried to convince us that price was going, we should be getting in for a buy. It broke above the green line, and then it decided to go down. However, we've still got a green super trend. We've still got a green wave up, and we've still got the peace house pushing up. So this is a bit of a fake out. If you listen to Paul and the other live traders talking about what is it, stop hunts, the big boys will try and convince you that price is going up, and therefore you put your stop loss down here, and then they'll come back and take the stop loss out. Or they'll convince you that the price is going down, so you put the stop loss up there, and that wick there took that out. If you had a stop loss up there, that wick would have taken your stop loss out. This is a wick back down to take stop losses below out. That's how the big boys make their money. Now, the other thing that I need to say about what I'm looking at here is you've got the green line forming a wedge with the red line, and when price is in that wedge, that's what I call no man's land. I wouldn't get into a trade whilst it was in that wedge. I did a lot of back testing, and I found that once it got past the crossover there, it didn't really have any significant impact. In other words, if I was looking at getting in for a buy or a sell here, it wouldn't bother me that price was within that wedge. If I was looking at a strong positive buy situation, it wouldn't bother me that it was there. Other than I would expect price to respect that red line. So it might go up, but it might hesitate once it gets to that red line before it broke through, or it might bounce off the red line. However, where are we? We're in a down zone, we're in a wave down, but we've still got a green super trend. It's flat. So that could soon be changing. The PSARs are well above, way above, pushing price down. So I'm going to go back to Euro, have a look. That's not looking good. That looks as if it might hit my stop loss. So this is possibly another fake out situation where they tried to convince us that they were pushing price up, and then they've taken it back down again. Where's the 1 o'clock candle? Right, so something else that I've noticed, if you look at the 1 o'clock candle and you look left, maybe you go back to the 15-minute chart. When you're ready, okay. So that's the 1 o'clock candle. At that point, we were in a downtrend. There was a 1 o'clock candle. Before the 1 o'clock candle, we were in a downtrend. And the best trades I find with Crossfire is when you get a reversal. So ideally, what I'd be looking for is for price to come down, 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 and then after 1 o'clock to make a positive move upwards. So that's why I got into that trade, because I was expecting it to move upwards. Doesn't always work, but let's just have a look at the bigger picture. Sorry. That one there. So you can see the wave was coming down at 1 o'clock. We were in a down wave, and I expected a reversal. And in that situation, I didn't get it. But that is always a stronger trade than a continuation trade. If we'd gone in for a sell, that would be a continuation of that downtrend, and that, to me, that's not as good a trade. Now, let's just go back to the 2-minute chart and look at something else. Yeah, so I would have been stopped out here because the price just weakened below my stop loss. So could I have got a better stop loss? That was the wave up candle. That would have been the alternative, but that's a bullish candle, but that's way too big a stop loss for me. So you basically, you've got two alternative stop losses in any of these trades. You can go for the wave up, the bottom of the wave up candle, or you can go for the previous bull candle. The reason I went for that was that one's 12.3 pips. This would be way over 20 pips. That would be too big for me. So yeah, I took I took the trade sort of to the best of my ability. Normally, that stop loss would have been adequate. It was just slightly insufficient. The wave's gone down. We've got a down zone, we've got a wave down. The PSRs are above, so maybe we're not going to get a sell. So one last look at GBP card, and I'll look at something else.
Why sometimes people don't trade on a Friday, guys.
Yes,
because I think Richard's just been unlucky here.
Yeah, that was. Sometimes you can do everything right in a trade, and you can still lose it, and that was a good example. That one just wigged me out. Yeah.
Would you have put the trade on live in spite of the Canadian news at 1:30? That would have stopped me. I'd have waited for the news to settle down.
Yes, yeah. But I say I don't regret getting into that trade. I did everything right, but my stop loss was just slightly too little. Look what's happening now. As I say, sometimes you can do everything right and still lose a trade, but at the end of the day, I've lost 1%. I'm not going to worry too much about that. Let's have a last look at GBP card, and then I'll look at something else. So GBP card. We're in a down zone, we've got a wave down. It's gone below the red line, tried to tempt us in to a sell. But price has actually gone back up again. So that was 13.30. I wouldn't have got in for a sell because I still had a green super trend. It's changed to a red super trend. So we've lost one trade, but hey ho, that's just one trade. What I was going to do to sort of, because as I said, I don't think the US dollar is going to move a great deal before 3 o'clock. We'll just check them out. I didn't put my lines onto that. So we'll go back to the 15-minute chart in readiness. So that's the 1 o'clock candle. Looking left from that, the wick, top of that wick, the next one is up there. You don't have to be 100% accurate. That's near enough. Yes, as Paul says, Friday is a strange day for trading. 1 o'clock candle, bottom of the wick, look left, look nearest low, it's there. That's that one. I'm just going to drop down to the 2-minute time frame, see what's happening. So basically, it's still in no man's land. You can see this. This is consolidation, as it says here. US dollar improves early Friday ahead of existing norms. But basically, the markets are just sitting on the hands and not doing anything. I wouldn't get into that trade whilst it's in no man's land. GBP USD. Let's have a look at this 15-minute. That's a 1 o'clock candle. So look left. That's the nearest low, lower. Going to be quite a steep. Okay, so that's touching. So 1 o'clock candle, look left from that wick, it's up there. Okay, so that's an interesting setup. So what I'm seeing here is there's a crossover point. It hasn't reached that. It's gone below the red line. So it's looking like a sell. We've got a down zone. We've got a wave down. We've got a super trend down. This is where price would need to break below to break structure. But what I'm seeing is, again, consolidation. That's just moving sideways. So I'm not going to get into either of those trades. I'm going to go back to the Euro card and the GBP card. Yeah, that one went wrong. GBP card. Now that's dropped below the red sell line. That was where I was considering getting in for a buy. That was going to be my stop loss. So I'm going to get rid of that one. So this is down zone, wave down, super trend down, PSARs above. This is where price would need to break below in order to break structure. It hasn't weak past it, but it's gone up. So basically, I would look for drop down to 2 minutes, and I'll be looking for a down zone, wave down. The wave candles are pointing down. We've got super trend down. That's looking like a sell. And the reason I'm hesitating to get in is because it could just be clinging to that 50 moving average. Right, so whilst we're waiting for something to happen, I'm just going to talk about volume profile, which I basically, on Tuesday, I sort of briefly looked at volume profile. I use it to help me make my trading decisions. I showed on Tuesday how to get this indicator. I'll show you again. If you go to indicators, metrics, and strategies, if you click on that and you go to technicals, and then you go to volume profile, the one I use is the session volume profile. I did a video quite a while back on what these different volume profile indicators all do and what they mean. My favorite is the session volume profile. So if you click on that, you get what I've got on my screen now. So I tend to look at the 1 hour chart, and I can see start on the 1 hour chart and then drop down to the 15-minute. But basically what I'm seeing here is that this is today's trading session. This is the volume profile for today's trading. I do kind of ignore that. I look at yesterday's volume profile. So this is yesterday's. Between these two dashed blue lines, that's the entire trading yesterday. And what that's telling me is that of all the trades that were placed yesterday, the peak of the trading was where that red line is there. That is what we call the point of control. As it happens, there's another slightly lower peak there. So yesterday was like a double, what's the word? There's a double peak in that one's slightly lower than that one. So I would bear that one in mind as well. But just going to talk about this red line, which is the volume profile. And what we use this for is on today's trading, we look for a price to come back to that, to yesterday's point of control. And you can see it did come back at 6 o'clock this morning, then it went below it, and then it's come back again. If you extended that red line, this would have been another potential trade. So what we used to do was look at taking trades from the top blue line down to the red line, and from the bottom blue line back up to the red line. If you extend that red line, you can see it's hit it twice. One's coming down and one's coming up. That's another potential target. And I've just noticed there's something else here as well. Whilst I'm looking at this, can anybody see some imbalance? All of this, all of that candle up to that point was imbalanced. So price is going to have to come back down again to take out this imbalance. It's going to have to come back down here and take out that imbalance. It's going to have to come back down here and take out that imbalance. So that's how I use my volume profile and imbalance to give me a clue as to where price might be going. Now you can see this red line here. This is an outstanding point of control, which is yet to be taken out. So this is from Wednesday. Yes, that was yesterday's point of control, and it's already been taken out a couple of times. But this one still hasn't been taken out. So looking sort of below the current price, there's a reason for price to come back down and take out that imbalance. There's three reasons for price to come back down and take out imbalance. And then there's a fourth reason, because this point of control has got to be taken out as well. You can see, if you look at the shape of the profile, there's a big peak here. And there's another peak there that corresponds with this imbalance. There's another peak there that corresponds with that imbalance. What I'm trying to explain is that people who invested lots of money at those points, and they've got to come back to get that money. So if I was looking at GBP Canadian dollar and trying to decide which way price is going to go, not so much in the short term, but in the longer term, there's another outstanding point of control down here. And take my word for it, those two red lines will be taken out. The price will return to those two red lines. The only problem is I don't know when. If you look at, let's look at the 4 hour. Maybe you can't see what I'm trying. There we go. There's lots of outstanding points of control below the current price. Now, it might be next week, it might be next month, but sooner or later prices will have to go back down and take those out. So if I'm looking at a chart, I look for outstanding points of control and I look for imbalance. And then I go back to smaller time frames and see what's happening at the minute. So, right, here we are. We've got some action. 2 minute time frame. Price went right down there below the red line, and then 1338, prices started to go back up again. We got an up zone, we got a wave up. All we're waiting for now is for this super trend to become a green super trend and for this price to go above the green line. So up zone, wave up. We just want the super trend. And preferably for price to get not only above the green line, but above the red line too, because even if you get in for a buy at the green line, it's going to hesitate when it reaches that red line. It may break through it, but it will hesitate when it gets there. So I would prefer to get in for a buy once it's broken past the red line, and also when that's changed to green. Let's have a look at the other Euro card. That went totally wrong, didn't it? So the green line is there and it's dropped below the green line. It hasn't yet gone below the red line. The red line was a horizontal line. It's wick below it. We've got a down zone. We've got a wave down and we've got a super trend down. So am I going to be tempted to get in? If I did get in, that would be my stop loss, the top of the bullish candle, sorry, the top of the bearish candle. So let's mark that. So that's going to be my stop loss when I get in for a sell. So let's do it just for fun. We put a short position. We're going to get in at that point there. We're going to move our stop loss way up there. Now that's 20.5 pips. That's just about the extreme of my tolerance for a stop loss. 20 pips is about as far as I'm happy to go. So I'm looking for price to come back down to this blue line here. What's actually happened is price has bounced off the sell line. Does anybody want me to go through what this is all about? I had a question on Tuesday and I went through it and explained it, but if anybody got any queries, just ask. Nothing in chat. Okay, so I've set my stop loss here. This was where I got in, and this is where I'm hoping to go. If I lose that trade, I'll lose 1% of my trading account. If I win this trade, I'll gain 1% of my trading account. I've still got a down zone. I've still got a wave down. I've still got the super trend pointing downwards. The PSARs are above the current price, pushing price down. Whilst I'm waiting on that, I'm going to look at the US dollar pairs. Okay, so US dollar has gone below the red line, so we could be considering getting in for a sell. We've got a down zone, we've got a wave down, we've got a super trend down. So it looks like it's heading downwards. Where would I put my stop loss? Top of that wave candle. That's the wave, top of the wave down candle, basically because there wasn't a bearish candle to put it on. So that's going to be my stop loss. Let's say I'm going to get in where price is now, short position, stop loss up there, 12.8 pips. So it needs to go get down to that point there for me to get my take profit, my take profit. And obviously, as soon as I get in, it decides to turn around. Never mind. Euro US, have a look. That's well below the red line. So we've got the Trinity, we've got the zone down, we've got a wave down, and we eventually got the super trend down. But price is actually going up. So I'm not going to get into that one just yet. I'm going to think about where my stop loss is going to be. It's going to have to be the top of that candle. As I say, I'm not getting in because price is actually going up. Everything else is in my favor, apart from the fact this has started to flatten out. We'll go back to the pairs. Euro CAD. So we wanted it to come down and it's actually starting to go up. I'm not panicking because we're in a down zone. We've got a wave down. We've got a super trend down. We've got PSARs pushing the price down. So I'm not going to panic there. The only thing I've noticed is that prices respecting that sell trend line that I drew on. So it's having a think about whether it's going to break through that or not. GBP card. We didn't get into a trade on that one. We've now got a down zone. We've got a wave down. And we've got the super trend down. Now, this is where the two possible stop losses come in. There's a bearish candle there where that red line is, or there's the wave down candle there. Just quickly look at that, 365, 341. There's not enough pips using that one. So if I was going to get in, I would probably use that one. But I'm not going to get in whilst price is heading upwards. Yeah. There's about 10 pips between my stop loss and where current prices. So let's do that one. Or maybe a little bit too late. So that's now 14 pips. So we need price to come down here. Okay, so a little bit of action on the US dollar prices, on the US dollar pairs, which I wasn't really expecting, but let's go back to the Canadian dollars. So we're looking for price to come down, and it's doing it. It's a bit slow, but it's doing it. Current situation, down zone, wave down, super trend down. The wave candles are still going down. The PSARs are still above price, pushing it down. And this is still saying bearish. But it's actually clinging to that trend line that I drew on. GBP card. Down zone, wave down, super trend down, but it's flattened out. PSARs above the price. Not going to give up on that one. GBP, no, sorry, Euro US. Zone down, wave down, super trend down. Price is actually going up. The PSARs above the price, but we didn't get into a trade there. And that one's not looking good. Down zone, wave down, super trend down, although it's flat. Right, I'm slightly over time. Anybody got any questions, comments, whatever, before I? Okay, so one last look. Euro card. So we lost out on that one. This one's still struggling. So I'm down 1%. So this is still a possibility. GBP card. That's still a possibility. Euro US. I didn't get into one there. It's dropped below my sell trend line. And I could have got in, I could have got a few pips there. It's too late now. I was actually not really looking at the US pairs because I'm expecting price to move around about 3 o'clock. But I missed an opportunity there. Let's just measure that. Let's say I got in on that candle there. It was about 12, just under 12 pips there to be had before it reversed. That's what you get when you're not looking at pairs. I was deliberately not looking at the euro pairs because I think 3 o'clock is going to be the time. And I've just lost the 1% on there. So I've lost 2% on demo. Right, any last questions before I call it a day? Thanks for jumping on. Have a good weekend. I'll see you.
Great session, Richard. Thank you.
No problem. Thanks a lot. Cheers now.